everybody, it's Ian Beamer, guaranteed rate. Hope everybody's doing well. Hope everybody's staying healthy. Wanted to welcome everybody to the real estate market in 2022. Looks to be a very hot market. We're picking up right where we left off in 2021. It is every bit as competitive. Properties going above asking, multiple bids, sometimes well above asking, and that's leading to some appraisal issues sometimes. So wanted to talk to you today about what to do if your appraisal comes in low. Assuming you've already gone back to the seller, tried to renegotiate, the sellers won't budge, you still want to move forward, you still want to purchase the property, you think it's worth it, you've been out there, you've looked at other properties, so you know what your dollar gets you in this market. So you want to move forward. Let's use the example today on a $500,000 purchase price. Assuming you're going to put down 20%, that'd be a $100,000 down payment. Appraisal comes in $30,000 low. What are your options? Well, your first option is to buck up and put down an extra $24,000, which would keep your loan to value ratio at 80%. So we'd be financing then 80% of $470,000 instead of 80% of $500,000. That would cost you an extra $24,000 of down payment. That's your first option. Keeps everything else the same. You've got the same loan, same rate. Payment actually goes down a little bit because you're borrowing slightly less money, which is great. But coming out of pocket with $24,000 additional down payment may not be ideal. So what are your other options? Option two, mortgage insurance, which monthly mortgage insurance may not be the most attractive offer. Scares a lot of people away, but I'm not sure it warrants that much concern. So properties going up in value. We assume properties will appreciate in 2022 at least 5%. I think that's a conservative estimate. I think it'll be north of that. We'll see what 2023 brings. But typically, if you have monthly mortgage insurance, you're required to keep that monthly mortgage insurance for at least 24 months unless you pay off the loan early, unless you refinance, or obviously sell the property. That monthly mortgage insurance rate, assuming great credit, assuming single family home, and this will change depending upon credit score, depending upon property type, but that monthly mortgage insurance rate coming in $30,000 under changes about 5%, a little over 5%, the loan to value. So that monthly mortgage insurance would be about $60 a month on that $470,000 purchase price, $374,000 loan amount, $376,000 loan amount, excuse me. So about $60 a month. It's 0.18% of the loan amount. Again, assuming great credit, assuming detached single family home. $60 a month for 24 months minimum means you'll come out of pocket. You'll spend about $1,440 over those 24 months minimum. If properties don't appreciate, you may have to keep that monthly mortgage insurance even longer, which may not be ideal. There is a third option. The third option is called a lump sum or single premium mortgage insurance plan. So instead of paying monthly mortgage insurance and instead of paying the additional $24,000 down payment, you can pay mortgage insurance all at once at closing, one and done, be done with it. That option on the exact same scenario would be about $3,000, about $3,100 total at closing, assuming again great credit, assuming again single family home. That's a detached property, about $3,100. So you don't have to have the monthly mortgage insurance. You don't necessarily have to come out of pocket to make up the difference. A lot of this depends on how much you were planning on putting down initially, how far underneath the contract price the appraisal comes in, and what type of property you're buying. Is it a primary residence? Is it investment property? Is it a second home? All these weigh in. But you do have options. Please reach out to me. Let me know your questions, your comments below. I appreciate you watching my video. Please like and subscribe. I look forward to talking to you soon. Have a great day. Bye-bye.